Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets? Well, we got a lot of volatility, right? I mean, the Dow can move 800 points in a day easy, right? It can move 800 up and 800 down all in the same day. There's a lot of volatility, and volatility like this usually happens at a major top, not a minor top, a major top, a major turning point. You get this type of volatility. Now, the volatility is in the marketplace, and we see things like the NASDAQ. The NASDAQ, I think, has already topped out, and I think it's coming down. I think it's going to go up, make a lower high, and then continue lower. Now, the S&P and the Dow, they still are going to try to push those up higher, in my opinion. Maybe they can do it. Maybe we are seeing that top. I don't know if it's the exact top, but we're getting really close. Use a little caution out there, and we'll just see how this all plays out as we come into the election months. Okay, I want to talk a little bit today about a lunch I had with one of my friends. I call him Milby. That's not his real name, but that's what we'll use. Milby, now, he loves money, but he loves real money. Real money. He loves the gold and the silver. As a matter of fact, he loves it so much, he bought himself a mine. Now, Milby is a very wealthy gentleman. He has millions and millions of dollars, and he went and purchased a mine in Idaho, right? Okay, so he loves the gold and silver. And you know, it's so fun when you talk to somebody that's on the same page as you, right? I mean, I talk to some of my friends, and they just look like a deer in the headlights. They have no idea what I'm talking about. They don't want to hear it because they think I'm being negative. Look, I'm just being real, right? But when I'm talking with Milby, we had a great lunch because we think a lot alike. We think the system's coming to an end, and we think that you have to protect yourself. Now, the way Milby described it is there's still a window of opportunity open. Now, if you have resources, you can still get through the window. And he tells me that he tries to pull a lot of people through the window or push them through the window. There's still time left to get through the window of opportunity. You see, you can get out of the system that's failing, which is our fiat currency. It will go to zero, and you can get into real money and protect yourself in what will become the new system. The real money will always have some purpose in the new system, and you'll maintain your wealth, but you'll also increase your wealth. The wealth transfer that's going to happen is just incredible. And we talk about how this will look. Now, he had an interesting take. I'm not saying he's right or wrong. I'm saying it's very possible. He thinks this is going to happen overnight. Like you go to sleep on a Friday, you wake up on a Monday, and all of a sudden the stock market's down 30%. 30% down. Well, what would happen? They'd close the stock market, right? They'd set off the triggers. The protection team would come in, but they would shut the stock market down that day, and we'd pick up trading the next day, and the plunge protection team would get out there, and they have unlimited money because they're from the Fed, right? So the Fed will give them 10, 20 trillion dollars to go in and buy the market the next day, right? But it doesn't work because everybody's selling, and it goes down another 30%. So 30% one day, 30% the next day. You've already lost 60% of your money before you can even get out. You're not going to be able to get out. You see, when it happens, it's going to happen so quick. You wake up Monday morning, it's down 30%, the market's closed. Wake up the next day, it's down 30%, the market's closed. By the time they get the market open and functioning with their injection, they're going to inject the trillions and trillions of dollars. It'll be too late. Too late for the window of opportunity. You will not be able to get out at that point. Now, look, I'm not a prophet. I don't know if this is going to happen. I do have common sense, though, and I do see the writing on the wall. When he talks about the window of opportunity, I could not agree more, and I think that window is starting to close. Look, if you have resources, you can still protect yourself against the coming crash. Now, what's going to happen to houses? We talked about this, me and Milby. Now, what would happen to the housing market if the stock market went down 60% in 2 days, and let's say it finally settled about 80 or 90% down? What would happen to the housing market? Well, you wouldn't be able to sell at any price. You wouldn't be able to get out. The window would be closed on the housing market opportunity to get out with your equity. Your equity would be gone. There would be zero buyers, and you wouldn't be able to get out. But Mike, there's going to be a lot of buyers. Everybody's sitting on cash waiting to buy. Look at it. I see that. I see the demand, right? There's demand. But when this happens, nobody's going to have the courage to go in and buy. If they're sitting on cash, they're going to give you 50 cents cents on the dollar for your house at best, at best. But this is just what we see. Now, a lot of people, they got their eyes closed. A lot of our friends, they don't want to hear about this stuff. It frightens them. But you see, it's going to happen, right? I mean, we're getting to a stage that we're coming to, which is almost like a hyperinflation stage. But Mike, hyperinflation, won't that make my house double? Well, it may double, right? It may triple. It may quadruple. Look, you could have $1 trillion Zimbabwe note. You're not going to be able to buy a gallon of milk with that, right? $1 trillion doesn't buy you anything because the money went to zero. 0 times a trillion is 0. Look, when your money goes to 0, yes, your house may be worth $1 trillion, 10 trillion, 20 trillion, but the money's not worth anything. We can look back to Weimar Germany, right? Now they hyperinflated. It was 100 years ago approximately. Right? Okay. So they hyperinflated. And what happened? Well, you could buy a house with just 1 ounce of gold. 1 ounce of gold. Some houses, nicer houses, were 2 ounces of gold. But you could get a house for 1 to 2 ounces of gold. You could buy the whole city block, all the buildings included, for about 25 ounces of gold. Why? Because that's real money. See, that's what Milby loves. He loves real money. Hates this fiat stuff. He just tries to get rid of it as quickly as he can. He had so much of it. See, it's hard to buy millions and millions of dollars worth of gold and silver. So he went and bought the whole mine. That's fabulous. You know, I'm very excited for him. I mean, he's doing what I think he should be doing. I mean, he knows, he studies this stuff, and talking with him, I mean, we just hit it off so well. I haven't seen him in many, many years, but he's done very well for himself, very successful. And he talks about some of our friends not so successful. We can't pull him through the window. He's pushing one and I'm trying to pull him, but he don't want to go through the window. He wants to stay on this side. He wants to go down with the ship, and that's okay. Now, don't be afraid. Don't be afraid. They're going to continue to print money, right? We're on the Titanic. The Titanic's not sinkable. Oh, wait. It did sink. But they're going to continue to try to keep it afloat, right? As long as they can. The Fed's going to print all the money, you know, and we're going to get, like, I mean, we got an election coming. Maybe that Kamala gal, maybe she can save us, right? I don't think so. I don't think it matters, you know, as far as no matter who wins, they're inheriting a very bad situation. Now, I was reading an article on Yahoo. What a great time to be president, man. The things are going to boom right after the election. That's Yahoo Finance for you. I don't see it that way. Whoever wins the presidency, they're going to look really bad because it's coming down. It's coming down. Window of opportunity still open though, but that window is going to close soon. Look, in the last 4 years, we've lost 25% of our purchasing power. Right now, losing purchasing power is because of inflation, right? Prices going up, the dollar's going down. That's inflation. We lost 25%. Now that is a tax. A lot of people don't look at it that way. They don't look at that as a tax. See, they say, well, Biden says he's only going to tax people that make over $400,000. Mike, I don't make over $400,000. I got news for you. He taxed everybody 25% of every dollar you earn, of every dollar you spend, of every dollar you had in savings before was taxed at a rate of 25%. Inflation is a tax. It's an inflation tax, right? So he probably taxed people more than any other president in the history of the United States, just because of the inflation tax alone. We lost 25% of our purchasing power in the last 4 years. Now, can you afford to lose another 25%? Let me ask you a question. A lot of rich people, not a problem, right? Not a problem. Rich people can afford it because they got assets that went up to offset the loss of their purchasing power. Poor people don't have those assets. You see, about 90% of the stock market is owned by about 10% of the people in the United States, right? So those 10%ers, they're doing great, man. That stock market's taking off. They can handle that increase. But what about the poor people? Poor people got to eat too. Can they handle it? No. They pay the price. They pay the price at the grocery store. They pay the price at the gas station. Now, look, when I say the system's going down, there's nothing to be afraid about if you see the window. If you want to get through the window, you can protect yourself. Banks are going down. They're going down. Now, see, a lot of people don't get that. My friends, I tell them the bank's going down. They say, but Mike, Goldman Sachs just came out and had the best earnings ever. JP Morgan also. Plus, they're going to make Jamie Dimon Secretary of Treasury or something, right? So he can run the whole country and his bank at the same time, and banks are going to be just fine. Look, banks have hundreds of billions of dollars in losses already, but you see, they're going to hold on to the assets until the end, right? They bought all these bonds. The bonds went down by 30, 40%, and they've wiped out hundreds of billions of dollars of your money, of my money, right? They took our money and they went and bought bonds, and now they're down 40%. But they're going to hold them to maturity so they don't have to say they've lost our money. Well, that's all great, but you know what happened to Silicon Valley Bank? People want their money back. Now, people want their money back at JP Morgan. People want their money back at Goldman. They're not going to have their money. So what do they have to do when they don't have their money? They have to sell these bonds. These bonds are being sold 30 to 40% off. What else do they have to sell? Commercial real estate. Oh my goodness, that's some commercial real estate's already down 90%. So they got to sell that off to get your money, but it's not all your money. It's about 40% of your money. They go, well, will you take 40% of your money? No, I want all my money, right? Don't you want all your money? Well, they're going to do bail-in. They're going to have to do bail-ins. The banks are going down. You see, there's over a quadrillion, not a billion, not a trillion, a quadrillion in derivatives that the banks, they trade between themselves. They trade back and forth. The whole problem is there's not enough liquidity. There's no liquidity in the market. Yes, they're going to try to get liquidity, more liquidity into the market. Now, how do they do that? They do that by increasing debt, right? They increase the debt. Look, how do they increase the debt? Well, let's go have a war. We need a war. You know, we can pay for the war. How do we pay for the war? With debt. All right, so we got to go sell the bonds. Look at this year. Next 12 months, they're going to sell 9 trillion of bonds. Don't forget the 4 trillion we're over budget, right? So it'll be about 13 trillion. Who are they going to sell them to? You going to buy them? I'm not going to buy them. Nobody's going to buy them. Fed's got to buy them, right? Fed's in trouble. Look at it. The banks, they're bankrupt. They're insolvent. But so is our government. Our government's bankrupt. Our government's insolvent. It doesn't have any money. It's just got to keep printing. Yeah, I promise you it'll keep printing. That's where the window of opportunity comes in. You see, the FDIC will tell you they guarantee your money's safe. Your money's not safe by the FDIC. The government will say they guarantee you they're going to pay you back on the bonds. Yeah, they'll pay you back, but that money's not going to be worth anything. The only guarantee I see for sure out there is that gold and silver are going to continue to go up because our government guarantees that. You know how they guarantee that? They're going to keep printing money as much as they can, as fast as they can. What does that do to real money? Makes them go up. What does that do to your purchasing power? Makes it go down. Lost 25% just in the last 4 years. Next 4 years is going to wipe out another 25%. This is like a hyperinflation. I mean, it's taken off. They have to print more and more money. You see, we printed 10 trillion for the pandemic, right? 10 trillion is not going to be enough next time. They're going to have to do 20 trillion, maybe 30 trillion, maybe 50 trillion. There's no telling how much they have to do. But at that point, it just starts hyperinflating. We become Zimbabwe. We become Weimar Germany. We become where real money starts to skyrocket. And yeah, maybe the Dow goes up. Maybe your house goes up in nominal terms. But compared to real money, it is going to get beat like over the head with a club. It's just going to beat it over the head. It's going to get beat down compared to real money. Now everybody go, but Mike, I don't know about real money. I only know about nominal money. You got to take the scales down from your eyes. You got to start to see this. Look at Milby. Milby, he's a preacher, man. He's out there preaching about the real money. He's preaching that the fiat's going to zero. I mean, this guy's amazing. But he talks about that window of opportunity. It is still open for you. You can get through. You can get out of the system. You can get into the coin of the realm, as I call it. The real money is what you want to be holding because that does not lose value. That goes up in the hyperinflation. That's what you're going to be living on. That's what the wealth transfer comes from. It's going to transfer from all the people in the stock market, all the people in the bond market, all the people in the dollar system. That's all going away. It's going to zero. Where's that wealth transfer to? The people in the real assets, right? Now, real assets, gold, silver, real estate's a real asset. I agree with you, but it better be paid off. It better be free and clear because they're coming after it. They're coming after it for tax purposes. They're coming after you. you. I'm telling you, it's not what you think it is. If you're holding it, I love real estate. It's been my life, and I believe in it. If you have free and clear real estate, hold on for dear life. Have enough real money, enough gold and silver so you can pay the tax, because they're going to raise on you and they're going to try to take your properties away. This is just what I'm seeing, Maybe I'm being a little negative. Maybe Milby's a little negative. I don't know. But Milby says we got to get more people through that window. He's pulling them. I'm pushing them. We're trying to throw the people through the window of opportunity. It's not too late. Get out there, everybody. Enjoy the day. I'm Tall Mike. Punch that subscribe button first and give me that thumbs up. Why not? Bye-bye now.